Welcome to another Rosie the Realtor show. Today I have the pleasure of having Juan Jimenez from CMS Mortgage with us. Hi, Juan.
How you doing, Rosie?
I'm great. How are you doing?
I'm doing excellent. Thank you so much. Thank you for having me here.
Yeah, thank you. Thank you so much for doing this. I greatly appreciate it. So, Juan, tell me a little bit about yourself.
Very good. Well, Rosie, as you know, I'm a mortgage loan officer. I've been working with CMS for the last Capital Mortgage Services for the last 7 years or so.
Wow.
I've been in the mortgage industry as a loan officer since 2004, though. Yeah, I mean that's mostly on my professional career. How long I've been in the business for mortgages. Personally, I am married. I have 3 beautiful kids. They're already older. 2 boys, 12 and 16, and my daughter, she's already 22.
Oh, time goes by so quick.
Right?
Yes, I remember when they were little.
Yeah.
Awesome. Well, today I know you actually prepared a little presentation that you'd like to share with us.
Yeah, let me see if I can share this with you. Give me 1 sec.
All right.
All right, and that way, let me take a look here. I'm gonna move your screen.
All right.
All right, so can you see my screen now?
Yes, financing options.
Very good, very good. All right, so I wanted to go over a little bit about just the different type of financing options that are available for clients. Financing options, as you know, there's a conventional financing done through Fannie Mae and Freddie Mac. We also have government financing, FHA, VA, and then we have other type of financing that's non-QM mortgages, college FHA loans, and so forth. Something to remember. What I like to call these financing options, for conventional Fannie and Freddie, they're your mom and pop in the loan. FHA and VA, your grandma and grandpa, and then you have your uncles in the background, college FA, non-QM, USDA loans, and so forth. Most clients, each program has its pros and cons, definitely for different clients. But conventional financing and FHA financing, they both have mortgage insurance, especially if you're coming in with less than 20% down payment, right? Now, on your conventional financing, if you're coming in with more than 20% down, then you don't have to have mortgage insurance, right? An FHA, regardless if you come in with 20% down or more, or less than 20%, you're still going to have mortgage insurance.
Oh, really? Okay.
Yeah, that's one of the big differences between those 2 programs. Now, an FHA, it's mostly geared for first-time home buyers. They do allow you to get financing with lower FICO scores versus conventional. They're a little bit more strict on credit history, FICO scores, and so forth. So on the conventional side, there's different options for mortgage insurance, whereas FHA, you get whatever they're offering, their set rate, and there's nothing that we can do to change that, right?
Okay.
On the conventional side, however, when somebody applies for a mortgage and they're going to have mortgage insurance, let's say because they're coming in with 5% down payment, well, you have different options. You can have your mortgage insurance paid on a monthly basis, with your monthly payment. You can have mortgage insurance paid in a lump sum, so one large payment to cover the lender's insurance for mortgage insurance. And the other option is that, to break it down, you can always pay half of that mortgage insurance and then the other half on a monthly basis. So it would be a lower monthly payment. Does that make sense?
Yes. Yes.
Very good.
I always say everything comes with a little bit of a fee, and I did know FHA is definitely geared more towards people with lower credit score, less down payment, first-time buyers, but typically, better financing on the conventional side. So, but I didn't know about the mortgage insurance. I guess I just assumed that it was 20% across the board. But
Yeah.
good to know.
And sometimes, when clients go with different lenders, and sometimes they're used on, just having that monthly mortgage insurance payment offered to them, but there's options out there, so it doesn't have to be a monthly payment that they need to have, in some cases, sometimes when they get a seller credit, I know in this market, it's hard to get a seller credit.
Yeah.
But let's say if you were to get a seller credit, you can always use that to pay that mortgage insurance one-time payment,
A lump sum,
right? And not have a mortgage insurance monthly payment with your mortgage.
Yeah, that could make a big difference. I think the one we were looking at yesterday was, what was it, like 240 and 250? Like it's a substantial amount. And over time, it definitely adds up. So I know I tell my clients, even on conventional, like unless you're gonna do the 20 where it makes that big difference, have a little reserve for a rainy day. But awesome.
Right, exactly. Yeah. Exactly.
Absolutely. And I see you also have a couple others on here.
Yeah. So, VA, with the VA financing, that's for our veterans. That one does not have a monthly mortgage insurance premium like FHA does. But of course, you have to qualify, based on your service for VA financing.
Right.
And then the other two options, or three options, CalHFA is an option for first-time home buyers. They have to be a first-time home buyer for that program. For that one, you're actually able to get up to 100% financing on a purchase of a loan. They have some income restrictions and a little bit tougher guidelines versus other programs like FHA and conventional. But if you have a client that's really tight on down payment money, and that would be an option for them.
Now, when you say 100% financing, is that because of the down payment assistance, or am I missing something?
Yeah, that's because of the down payment assistance. Yeah, so that's a program that it's offered here in California for down payment assistance.
Awesome. Okay, that's what I thought. And I actually would like to comment on that, because I don't want to say there's a misconception, but I get a lot of first-time buyers that call me and they're like, we want the 100% financing. Yeah. And they get so excited of what they think is free money, which you could kind of elaborate a little bit more on that. But I tell them, again, everything comes with a price. If you do have money down, it's going to probably be a better loan and better terms, versus going for this money that my understanding is for the down payment, it's due back upon sale or sooner, or for closing cost. I think they have to start paying it back right away in most cases, right? Obviously, there's exceptions to everything.
For a CalHFA, yeah, you don't have a monthly payment on those assistance, but it is a lien on the property, right? So you are going to be paying that back, and in some cases with interest. So, whenever you sell that property or refinance that property, that's when CalHFA recoups their money for down payment assistance.
Yeah, at the latest. Awesome. Yeah, and that's I think, and that's why I really I try to pre-qualify buyers as much as I can be, but then getting over to the lender, and I always say you really got to get that credit round and submit all the documentation, because you've seen it, I'm sure, a million times where you have a conversation, you think they're ready to go, you run the credit, it's like, wait, we found this, or we saw this, or they could be in a better or worse situation. So I always tell clients, you got to get with the lender and let's have him advise you on what your best program is, not just what they think is free money, because ultimately it's not, right? Or it could cost them quite a bit at the end.
Exactly. Yeah. And there's other programs, there's grants out there, depending on the city where you live, the city of Oxnard, Ventura, or other cities, they may have some grants available, for first-time home buyers. But for CalHFA, strictly for that program, yeah, it would be something that has to be paid back.
Yes. Now I know, I think things are kind of starting to stable again, but we had been in a at the end of last year, everybody seemed to be refinancing. This year, everybody's trying to, buy and sell. So I had heard that a lot of lenders weren't really working with Cal FHA loans. Are you guys working with them again, or are they still kind of on hold, or what's your take on that?
Yeah, no, we can work with them. I have a few clients that I have pre-approved for that program.
Okay.
But in this market right now, it's very, very hard to get an offer accepted, as you know. If you're
Yes,
getting zero, coming in with no money down, right?
absolutely. As a listing agent, it's like,
Yeah.
if anything goes wrong, I mean, I have nothing to hold on to, right?
Yeah, I mean, especially if you have 5 or 10 other offers, and you're comparing types. I totally understand. Yeah, but yeah, I don't know. For college FA, it's kind of tough right now.
Yes, but it's still doable. I mean, I've been
still
very
doable. It's still an
successful.
option.
Let me not discourage buyers out there. It's still doable. You
Yeah.
especially have to be with a strong agent in this market
Exactly.
to get that offer accepted and or make it work.
Yeah.
Perfect.
Right.
And so tell me about this non-QM.
Very good. For non-QM, those are for non-qualified mortgage programs, and those programs, they cover mostly programs where you're not qualifying with your tax returns, filed, let's say W-2s or tax returns. You're using mostly bank statements to qualify. In some cases, rental income to qualify. So these are alternative income programs, right? We still have to show that the client has or will have this income coming in, depending if it's a rent for a rental property or if it's a bank statement program. But there's just other options out there, especially for self-employed clients, that a lot of times self-employed clients don't have or don't, they don't report all of their income, or in some cases, they just have too many write-offs, right, on their taxes. So in those cases, if they can't qualify for, your conventional or FHA, then a non-QM loan may be an option.
Very good. Very good. Very informational. And I hope, I love how you did the little circles. Hopefully that helps people understand the differences. Because I think a lot of times buyers are just like, I need a loan, and don't really, understand. They heard from a friend that they put 100 down. So now in their head, they think I have to have 100,000 down, or they heard this one only put this down. And so again, I'm always being an advocate of you got to get with the right professional. You got to get qualified with someone that understands the different programs and can put you where you're best suited. That's going to help you in the long run. And my biggest comment is that interest rate, right? Some people get so fixated on so many other fees, and it's like, no, that interest rate is what's going to make the biggest difference at the end. And I've shown time and time again, here's an amortization chart. This is what they quoted you. If it goes up even 1%, the difference that it makes, especially over the life of that loan. So
no, yeah, definitely. Yeah, and with today's interest rates, they're super low. You can't go wrong.
Definitely better than the double digits our parents saw, right?
Yeah,
like
in fact, I think I have a let me see if I have here a graph here. Can you see this?
Yes.
All right, this graph actually shows you the rates and how the differences since 1970.
Wow.
Which is when they started, when rates started being tracked down. But as you can see here, depending on the decade, right, in the early 1980s, you can see rates were almost 20% interest rates.
That's just crazy.
Yeah, they were almost at 20%. And then from there, 10 years later, we were back down to, or they were down to about 10%. And then 10 years later they were in the 7.5s, as you can see, and then in 2010 about 5.5, 6%, 6.5, right around there. And right now, as you can see, 20 years out, 10 years later, down to in the 2s, which is unheard of.
Very unheard of and super low. I mean, super low, super low.
Yeah.
Especially for the, obviously with qualifying with good credit. I mean, it's, why would you ever refinance again? I mean, how much lower
Right.
can they get? That's
Yeah, exactly. Yeah, so this kind of gives you an idea, right, on interest rates and their movements. They're not always, the same. They could change every day, a little bit here and there, depending on how the market is doing. But if you want to see the big picture, this is it.
yeah. Wow, that's amazing. Well, very cool. Well, I certainly appreciate all the information that you've shared. Did you have any other slides or are we good?
No, this is what I wanted to show you guys.
Okay, awesome. Awesome. So Juan, if somebody wanted to contact you direct, what would be the best way?
The best way would be definitely by phone. They can
Okay.
always call me, text me, or email me. I'm always on my computer, so that would be definitely the best way.
Who's that young guy on that picture?
Right? I gotta get it updated.
You like my husband, everybody's growing out their facial hair and
Yeah.
aging themselves. It's like, wait, is that
I just took that picture like 2 weeks ago.
oh really? Oh wow, your beard grows fast. Just kidding. Very good. So I see your email here, Juan at mycmsloans.com,
Yes.
or your direct line being the 805-218-8667.
Yes.
Perfect. Perfect. Well, Juan, I definitely appreciate all the knowledge that you shared with us. You're the first one to share a graph, so I hope people like that. And thank you again, and looking forward to the next deal.
Sounds good.
Awesome.
Thank you so much.
Thank you. You're welcome.